Revati, you have covered up to 32A yesterday, right?
Yeah.
Okay.
33.
You have touched upon 33, correct?
Yeah, I have.
Okay. So, sir, anything do you want to share with them?
No, you can straight away start off with the liquidation.
Okay.
34 lane, you can just start off everything.
Okay. So, as a recap, I'll just, as usual, start with CIRP. Then I'll just move on with everything. And if I require anything, I'll call you. Otherwise, I don't require you to be there. Just to keep your phone with you. I'll take care of this.
My phone will be with me. It's just only till I go to the office.
After no problem. See, I can manage. That's not at all an issue.
Yeah. So, Selva, shall we start?
Yes, ma'am. It's almost 10 o'clock. We can start now.
Yes. Yeah. Okay. So, good morning, friends. Welcome back to this refresher course on insolvency. Yesterday we did the CIRP process. Today we will be doing the liquidation and voluntary liquidation. We have with us Pannaraj sir, the secretary of SIRC. Sir, good morning. Welcome to the program. And we have the faculty Anita Subramaniam, much sought after faculty for this course. Pannaraj has graciously accepted to come and to the opening session today, and he will be doing the honor of introducing our speaker. So we will continue with liquidation today, and tomorrow we will have the individuals and partnerships, and we are doing it in a very progressive, methodical manner. Whomsoever attends these classes, we can assure you that you will clear the exam very well. Anita will also be using the whiteboard and taking the sessions. So without much ado, over to you, Sir Pannaraj, sir. Sir, you have to unmute yourself.
Sir, you're not unmuted. Now you can.
Thank you very much and very good morning to all of you. And I'm very happy to introduce the very most sought after speaker, Anita Madam, and the chairman of this IBC committee, Revati Madam, and all the members. Very good morning. I take the pleasure of introducing her now. She is a Bachelor of Mathematics from University of Madras and Master in Finance from Indian Institute of Finance, and also a fellow member of the Institute since 2005, associate member of Company Secretary since 2001, and associate member of ICAA since 2005. She has additionally DISA since 2005, certificate of ESA since 2011, certified ethical hacker 2015, Master of Law from Madras University since 2015, insolvency professional since 2017, registered valuer since 2019, completed the certified course on financial accounting and fraud detection by ICAI since 2019, and cleared the independent director's examination in 2020, and only 2021 she is yet to do some course. Almost every year she has acquired. Great to see you, madam. And the executive summary of skills and experience. She possesses 2 decades experience as an auditor, executes the jobs of various audits and attestation services both in India and abroad, having in-depth knowledge and experience in income tax and income tax law and practice, done various audits for banks, statutory, revenue, stock and other audits, done review viability audit assignment for SIDBI on SICK SSI units for about 200 units in Tamil Nadu, having in-depth knowledge and experience in company law and practice, handled audit of wide range of enterprises from individual to corporate, including HFs and trusts, including advisory services, handled rights issue and offer for sale. And as currently faculty member of CA and CS Institute on imparting knowledge in insolvency and bankruptcy code 2016. Currently faculty member of CA, CS and CW Institute on imparting knowledge in valuation, advising insolvency professionals on filing and presentation before NCLT and NCLAT, and currently doing assignment on resolution professional and liquidator. That's after your efforts, madam. Proud of you. Thank you very much for accepting our invitation, and over to you.
Thank you very much. I think I'll straight away go to the class. Sir, I belong to good morning. I belong to old school of thought. I always use the whiteboard. I request all the members who are attending this particular class, please take a pen and paper. The PPT will be shared with you later. Currently, I'm going to use completely whiteboard. So for the sake of comfort, I'm just going to switch off my video, and straight away we will get into this liquidation. Whenever you have a problem or you have a doubt, any participant during my explanation, you can disturb me anytime. Never ever feel shy, because this is one course which is going to be like test your knowledge and also no negative marking, lot of things. And also it is a very good challenge if you understand properly. That gives you a very good comfort. So with this, please take a pen and paper and we will proceed accordingly. You would have been covered till yesterday about CIRP. The CIRP basically you would have covered from section 4. Is it clear?
Not too clear.
That's what even I'm looking into it. Just 1 minute, I'll try. Suddenly, somewhere things are not in a.
Selva, can you just help out on this?
Ma'am, you just try it out now, ma'am, please. I have enabled annotations again. You just try it out, please.
It's not coming. I'm really surprised. See, when I tried, it was perfectly all right.
Annotation is turned on, ma'am, to everyone.
It's not working, no?
1 minute. Let me just see my whiteboard. It's working, ma'am, but I don't have that pen or something.
No, I have pen. That's what even I'm surprised. Just give me
I'm
one.
just sharing my whiteboard. I'll just you can say I can draw the lines.
Okay, let me share my whiteboard and see that how it works.
Please.
No, it says somewhere things are okay. Let me try with Word document. If it is working Word, then it's not an issue at all.
Yes, please.
Just give me 1 minute. Okay, it's working in Word. What I will do is like I'm going to share.
Share the Word document and then write it.
Yeah. Is it clear now? Are you able to see the Word document?
Yes, yes, please.
Okay. So with this, let's go with the class. So today we are going to cover liquidation. The liquidation I think there is something wrong with my pen. Just give me 1 minute. I'll also use. I think now it's clear.
Yes, ma'am, please.
Okay, let's go with the chapter liquidation. Liquidation is one chapter. This is a very important chapter because currently most of the companies, wherever we are going into IBC, most of the companies, if you look into it, they are going into liquidation because there could be a possibility like the CIRP, there is no resolution. So naturally, if there is no resolution, we have to go into liquidation. Under what circumstances liquidations are going to happen? Section 33 talks about liquidation. Still, I think, is it clear?
Maybe you need to place your pen.
Yeah, I'll try. If otherwise, I'll use the next device if it is not going to work properly.
Yes.
Okay. So section 33 talks about liquidation. Liquidation happens in 4 ways. Okay, I think this is not happening. I'll just go to the. Just give me 5 minutes time. I'll just go to the other laptop. This is not working the way I expect. Just give me 5 minutes. I'll just join with you.
Yes.
Yeah, friends, till Anita joins, if anyone has any doubts, we can always take it up. See, as far as I would just like to tell you, as far as the exam is concerned, and the code, the regulations, and the other allied laws, what is my experience, and also I would say all my colleagues' experience would be that whatever is there in the code and in the regulations which we prepare for the examinations is going to actually impact us on a day-to-day basis when we are going to take up the practice. And so, the fact is we are not only preparing for the exam, we are preparing for a full-time practice in this course. This particular, if you see the practice, once we take it up, is going to be a very, very intense practice. And like I told you yesterday, you should have it as a separate vertical with someone who's, with a very good support system. A support system in the sense that you need to have your basic office infrastructure for because as soon as you take up the work, you'll have the claims, just pouring in the claims verification, forming of the COC, then your other things like preparing the IM, because what we think is, and what we think will happen and what will happen practically are two totally different scenarios. Because what you think is you think you have a good experience, you would have a good infrastructure, you have a good network, but it doesn't work that way. The moment you go into active practice, like I told you yesterday when I took up my case the first time, the first, as soon as you're appointed, within 3 days you're supposed to do the public announcement, you're supposed to take up control and custody of the assets of the CD immediately. So the CD came to my office and he spoke with me, and he was he said, I'm very open. This was just somebody has done something, and it was a very malicious thing. And the way he spoke, I really believed him. And then when we went into the, Anita, whenever you want to join, please do tell me, I will stop. I'm just sharing my experience. So when we went to the CD's place again, he said, Madam, a few people will come in the afternoon. I said, okay, fine. And we were just going through all his records and just finding out the background and everything. By 2:30, 3 o'clock, if you see, it was a very small office, like say 700, 800 square feet of office. And there were half of it was for the admin and for the MD, and the other half was for the public to come. It was a chit fund company. And by the time it was 1 o'clock, 2 o'clock, there were around 200 people. And then we asked him, what is the problem, sir? Why are there so many people? He said, no, this is how it is regularly. Then by the time it was 4 and time for the meeting, there were more than 350 people there, jammed up in that entire space. It was so crowded. And then he said, Madam, meeting is going to start. Why don't you go and talk? And I said, no, sir, I don't think I called for any meeting like this. He said, I don't know how these people came to know they want you to come and talk. And then we realized that we had been set up big time by this guy. And we actually told him, you come out with us. He said, no, I will not come out. And I said, if you're not coming, I'm not going. Finally, we took him out, and there was a huge, from 4 till 8, 8:30, there was a huge, crowd there who was shouting, who were threatening to become violent. We had to ask for police protection, and we had not actually been prepared to go and ask for police protection. But this gentleman had apparently undergone that a few times, and he went and called the police, and it took them some time to come, and it took the police a very long time to subdue them. And they did not believe that we were appointed by the court, even though we had taken the order and all that, because we were not wearing black coats. So I would say invest in getting a jacket or a black coat like an advocate. You have to go there more speaking and behaving like a lawyer rather than as a chartered accountant, because chartered accountants are generally a little sober, and we are not very aggressive. But when you go in such situations, you have to learn to be aggressive, learn to speak to those people. Because when we were talking, the police asked me to go there and address the crowd. I had to address it 2 or 3 times, and they told me address them in Tamil. And unfortunately, somebody had called 2 TV channels, and suddenly they started coming and recording it live. So it was a huge thing. And then finally, I told the police, I'm sorry, I cannot talk if the TV channels are going to come here. And totally refused and walked out of the place. And then finally the police had to request them to go out. So, this is the kind of situation that you will find yourself. Not everyone is going to have the same issue, but there is going to be a lot of resistance. There's going to be a lot of aggression from the creditors, because what they think is that when you take over as insolvency professional, you're going to refund the money back to them. But they don't understand this entire process of CIRP, the process of liquidation. And very sadly, in most of the cases, the haircut is going to be very huge, and secured financial creditors are going to take their dues, and you will be answering the operational creditors most of the time. And our people skills are also put to test in a huge way. It is put to test in a huge way. You have to be very diplomatic. We cannot be rude to them. We have to be prepared to answer their calls any time of the day and night. And this lockdown was a killer for me, because everyone was struggling for funds, and they thought that we were sitting on huge piles of money and not giving it to them. So we have to actually, be mentally very strong, apart from having our own physical infrastructure, as well as we need to have the I would say the knowledge and the depth to brief the advocates. And if the advocates are not presenting properly, we have to be prepared to go and present in the NCLT on our own, and also be able to reply back to the judges who are there. in the efficacy, the court efficacy is also something which we need to know. And apart from that, also interactions with the various professionals and getting the reports which we want from them. So this is going to be only a full-time profession. It will definitely not be something, like you have an income tax practice and a GST practice and a statutory audit division. No. When you are here as an insolvency professional, you need to do everything combined, and you have to be willing to spare all your time. You cannot have a parallel practice. It's going to be a totally full-time practice. Anita, are you ready? I think she's still having some issues with the system. So apart from all this, what we have to do is we have to ensure that we keep up to the timelines. You go to regulation 40A in CIRP, you will see the entire timeline chart. The day you get appointed, you fill up that date, make a template, get all the dates out, print it, paste it somewhere in your office, put it up somewhere in your office, and ensure that you meet the timelines. Because the regulatory authorities of both IBBI and the IPA will keep following up with you in case you have not actually complied with any of the timelines. And now a monetary penalties circular has also come in, which the IPA is free to impose on any erring IPs. That is the clause which has come. And if the IPAs are going to implement this particular thing to the spirit, to the word, then we will end up paying huge sums of money as penalties. And practically speaking, even though the fees which is you're supposed to get as a IP is quite high, it's a reasonably good fees, and you're always assured of your fees. You don't need to go back to your clients and ask them to pay the fees, because this is coming right on the top in the waterfall, like I told you yesterday, and Anita will be covering it today. The thing what we should do as professionals is do not compromise on fees anywhere, because the work intensity is very high, the responsibilities are extremely high, the compliances are very high, and the monetary penalties are also extremely high. So do not at any point in time think that if I take a case for, like, say 50,000 or 60,000 per month, I will learn. No, the vis-a-vis the risk and rewards are not matching. What you should do is ensure that your risk and your reward is matching. You know what? We are all professionals. All of you would be having more than 10 years of experience. That's why you're taking up this course. So don't compromise. Why should we compromise and do some work for a bank which is not going to pay you a fees which you know very well you should get around 1 or 2 lakhs for a particular case? Why would you compromise and accept 50,000? Do not accept low fees. Don't compromise on fees, because ultimately we will not be able to compromise anywhere. We cannot adjust anywhere, and you will be like I told you, your risk and reward is not going to be commensurate. So do not compromise on the fees. Ensure that you negotiate good fees, and you'll have the satisfaction of having done a good job, and your professional skills are utilized fully. The basic thing is, do not compromise on fees, negotiate your fees properly, then your fees will automatically come to you. And I think Anita has put okay there for me, so I will stop my talk. Anita, yes, please take over.
Thank you. I'm sorry, because there are so much of problems with the whiteboard, and I always use the whiteboard. If I don't have the whiteboard, I'm finding it very difficult to teach through PPT, because I don't trust in PPT. Rather, I like teaching through a old method. Let's see that if it is working excellent, because I tried with various means. Finally, it is working. See that. Let's go into straight away liquidation. Yes, it's working. Okay, so liquidation happens in 4 circumstances. Then, okay, I'll do like this. Liquidation happen in 4 circumstances. Circumstances number 1, when there are complete CIRP is over, which means 180 days plus 90 days, maximum of 330 days is over. Still, there is no resolution plan received. No resolution plan received. Under that circumstances, automatically this goes into liquidation. Number 2, the repayment plan, resolution plan given by the resolution applicant is rejected by the court, which otherwise means there is no acceptance of resolution plan. Resolution plan is rejected by AA. AA here means adjudicating authority. If the resolution plan is rejected by AA, again it goes into liquidation. There is a likely chances the COC members, you know who are the COC members? The COC members decided, let's not continue the CIRP plan, let's go for a liquidation. During the first meeting, second meeting, before coming to 180 days, they decided, we are not interested to go with the resolution plan, let us go for the liquidation. So the COC members, if they decide, no, I'm not interested to go for the liquidation, again, this goes into liquidation. And fourth one, okay, resolution plan is approved. However, there is some kind of a contravention done by the corporate debtor in such a way that there is a problem, and this contravention is certainly affecting some of the people who are being absolutely acceptable with the resolution plan. Again, any kind of a contravention, this goes into liquidation. So liquidation occurs under 4 circumstances. This is given in section 33. Okay, what are the circumstances? The circumstances, number 1, no resolution plan received and maximum period of time is over. Number 2, the resolution plan given by COC is rejected by AA. Again, this goes into liquidation. Number 3, the resolution plan given, the COC decides, we are not interested to go with the resolution plan, rather this company is fit for liquidation. Again, this goes into a liquidation. The fourth one is the contravention by the corporate debtor. Accordingly, again, it goes into liquidation. Liquidation is basically an automatic process. There is nothing called waiting period. If any one of the event happens, the moment maximum period over, no resolution plan, automatically goes into liquidation. Over and above, if you recall, yesterday you would have been told very clearly, after the resolution plan is approved, moratorium is lifted. So if the resolution plan is not approved, also moratorium is lifted. However, 33 subsection 5, it very clearly says any kind of the problem, which means 33 subsection 5 very clearly says, if there is any kind of a suit or other legal proceedings, the same shall be instituted before the liquidator, and nobody can file a case against the liquidator. Everybody has to, the liquidator has got a right to file the case and nobody is allowed to file the case. Same kind of a moratorium is applicable under section 33 subsection 5. If you recall, this is something related with Companies Act, which is like, if you look into it, 279 of the Companies Act always talks about the very same provision in the Companies Act. In your examination, Companies Act also is there. So if you read one act thoroughly, the other act, everything will fall in a correct space if you are going to thorough with one area. So the liquidation basically is section 33, and section 33 deals with the liquidation under 4 circumstances, which I have already explained to you. 33 subsection 5 talks about no suit or legal proceedings can be proceeded against the corporate debtor, and section 33 subsection 7 very clearly says that is the last date of all the employees or workmen of the corporate debtor, except if the liquidator feels that this can go for the benefit or the maximization of the wealth of the corporate assets of the corporate debtor. Otherwise, the moment a liquidation order is passed, that is the last date for the entire liquidation process of the employees. These are the very important areas in this respect. Okay, so to recall certain areas, I would like to bring your attention in CIRP. If you recall, you will give a public announcement. Who will give a public announcement? IRP will give a public announcement. Same thing, there are certain rules. Once the liquidation order is passed, that is the last date for all operations. Unless and until the liquidator feels that it is good for them. Whenever you are going to read this particular IBC, everything has been arranged in a proper way. If you understand the process flow, it is easy for you. You can remember, recall, because IBC contains only 255 sections. Operative sections, if you are going to look into it, it's hardly going to be 90 to 100 sections. Balance or support sections. Okay. So certain areas you are supposed to know very clearly so that it is easy for you to understand in a better manner. So section 33, how liquidation is happening. 34 talks about how the appointment of liquidator is happening. And whenever appointment, there is a fees to be also to be discussed. Whenever there is an appointment, the next section, most of the areas will talk about powers and duties. See, why I'm saying appointment, powers and duties, when there is meeting, notice to be given. So you are convening a meeting. Why you are convening a meeting? Taking a voting right. Why you are taking right? To pass a resolution. See, if you understand these kind of a simple concept, every area this is going to apply and you will be able to understand. And if you are creating your own chart, examination is easy, understanding is easy, practice is easy, assisting somebody is also easy. So whenever there is an appointment, the next section is going to be powers and duties. Next section, whenever there is a powers and duties, the next section is going to be I'm really sorry. There is a lot of disturbance this time today. It's happening. So section 36 talks about you regarding liquidation estate. I'll explain everything one by one. Don't worry. My unfortunate thing is like suddenly my pen and this whiteboard is not working the way I expect. Maximum I'll try to explain to every area. And 37 is powers to access information. See, let's go one by one. 33 we have covered. 34, appointment of the liquidator. Technically, most of the areas, if you recall in CIRP, IRP can be changed as RP or new RP can be appointed under section 22. Same way, the RP can be removed during any period of time under section 27. Same way, whomever has been appointed as the RP, the same person, if it goes into liquidation, will be appointed as the liquidator by giving form AA. If he is not interested to continue as the liquidator, if he is not going to give a form AA, it is the duty of the NCLT to appoint somebody else, because that or otherwise COC can recommend some other person in the name of this particular resolution professional. But if you look into it, the appointment can be removed only on two circumstances. One is the AA rejects the resolution plan. If the AA rejects the resolution plan presented by the resolution professional, AA will reject the resolution professional, new liquidator will be appointed. Number 2, if there is any kind of a disciplinary proceedings against that particular resolution professional, under those circumstances, the board will recommend for a new liquidator. The existing RP cannot be appointed as the liquidator. Number 3, the existing RP says, no, I am not interested to continue. I will not continue as the liquidator. Then the new RP is appointed. On all other circumstances, existing RP will be appointed as the liquidator. That is what is explained in the appointment of liquidator. In respect of the fees, if you look into it, the fees are very clear. One is like yesterday you would have been covered on one area, which very clearly says the COC will appoint the fees for the during liquidation. If the COC is not going to appoint fee for the liquidation, definitely there is a provision which allows to share the fees as a percentage of method, which I will teach you during our liquidation process regulation. Okay, so fees can also be fixed by the COC during CIRP. The same fees will be continuous the fees of the liquidator. What are the powers and duties? See, from examination perspective or there is nothing very particular on it, but while you are on helping somebody or while you are going to do that, powers and duties are very much important. What are the powers? The same powers you have read in CIRP: take control and custody of the assets. Control and custody of the assets, and it is also your duty preserve and protect the assets. These are the very important jobs of the liquidator. The first thing is that liquidator is supposed to verify the claims. For verifying claims, there are certain procedures. Number 2, it is its duty that he has to control and take custody of all the assets, properties of the corporate debtor. Number 3, it is also part of his duty to preserve and protect the assets. It is also the duty of the liquidator to sell the immovable property which has not been taken over by the company in a which has not been taken over by the financial creditor in such a way. If they are not interested to give this particular assets in a pooling basis, it is the duty that they can take it out. The secured creditors can take it out and sell it. If it is going to be in pooling purpose, it is the duty of the liquidator to take every preserve and protect, control and custody of the assets. Is the part of the powers and duties of the particular liquidator. What is the liquidation estate? Liquidation estate, as the name itself says, it is the duty that every asset should be pooled in one place, and all these things have to be under the control and custody of the liquidator. And anything which is outside the pool, you should also ensure that if the secured assets are taking this particular assets out of the pool, it is their duty, they will sell it. If they are bringing it here, it has to be under the control and custody of the liquidator. The main issue is that it is the duty of the liquidator to see that the particular assets, or whether it is movable, tangible, movable, everything should be under one particular area, so that it is the duty liquidator has to sell these assets and bring the money in the estate and distribute to all the stakeholders as per the rules given in IBC. So this is one of the important aspects, especially in respect of the liquidator. More than that, if there is a section which is very much important, 36 subsection 4 of this particular section very clearly says what are the assets not covered in liquidation assets. They say that if the assets are kept by the corporate debtor, if third-party assets are kept by the corporate debtor, that cannot be taken into the pool. Second, if it is a subsidiary company's assets cannot be taken into the pool. And if there is a bailment contract given, then those assets are not the corporate debtor's assets. Number 4, any contractual arrangements wherein this particular assets should be given to a third party, again, those assets cannot be taken into the custody of the liquidation estate. This is a very important provision in this particular IBC. You have to read, understand, except, shall not, double negative, single negative, every area you have to mark and see that and understand everything properly. So 36 subsection 4 very clearly says what are the assets not forming part of the liquidation asset. Okay, the next one is the liquidator requires some information. Any information he requires, he can very well write to those people. It is the duty of those people to give the details asked by the liquidator. These are the important areas. Now let's go to the nitty-gritties here. Liquidation order is passed. This is called liquidation commencement date. And moment order is passed, liquidator is appointed. The moment liquidator is appointed, within 5 days, he has to give a public announcement. How he will give a public announcement? He will give a public announcement where the registered office of the CD is there. One in English paper, another one is in vernacular language. One in English paper, one in vernacular language. Within 5 days from the date of liquidation order has been passed, and seeking the stakeholders to file the claims within a period of 30 days. This public announcement will say submission of claims within the period of 30 days. When they submit the claims, there is always a likely chances within 14 days they can withdraw or vary the claims. Okay, once they submit the claims, the liquidator is having complete 30 days for verification of claims. And once it is a verification of claims is over, within 7 days, the liquidator has to say accept the claim or reject the claim. If he feels this particular claim has to be rejected, he can reject the claim. It is the duty of the aggrieved party to file before AA within 14 days from the rejection of the claims by the liquidator. Let me explain once again so that this is a very important flow chart. If you understand this flow chart, it is very easy. So that this is called a liquidation process flow chart. So the moment liquidation order is passed, the liquidator is appointed. The moment liquidator is appointed, within 5 days, he has to give the public announcement. Once he is going to give the public announcement, why he is giving a public announcement? To collect the claims. The claim should be received by the liquidator 30 days from the date of passing the liquidation order. Now the question, can the liquidator accept any claims after 30 days? The answer is no. The liquidator cannot accept claims. If you recall in CIRP, the minimum is 14 days, maximum is 90 days. But here, the 30 days period is what every stakeholder has to file the claim. Okay, once they file a claim, there is a likely chances they may withdraw or vary the claim within 14 days, which is allowed. And once this submission of claims is over, the complete 30 days period is there, because the company is going to be once for all. So 30 days time is given for the entire closure. So verification time for the liquidator is 30 days. Once 30 days is over, it is the duty of the liquidator to certainly accept or reject the claim. Whatever the claim amount has received, he has to either accept fully or reject, or he can reject partially, depends upon the situation. That he has to communicate within 7 days. And if there is any kind of a rejection, the aggrieved party has to file show cause why my claim should be accepted. A kind of appeal he has to file within 14 days. All this plays a very vital role in your examination and understanding. This is the timeline all liquidator has to follow. Now, let me ask you a question. I want people should answer this. within how many days the aggrieved party can file before AA. 1, 30 days. 2, 14 days. 3, 7 days. 4, 5 days. So let's see, because these are the areas important. Yes, the answer is 14 days. This is repeated question. Section 42 gives you a very clear answer for this. This is one of the very repeated question in an examination. So these areas you are supposed to clear, especially in this area. Now, having said that, before getting into section 43, which are very, very important areas, I would like to give you a I would like to cover liquidation process regulation, then we can come back to section 43. Because you cannot read anything separately, you have to read it together, liquidation code as well as liquidation process. When I said claims, okay, the claims, you would have also read in CIRP what are the claims to be filed. In liquidation, claims are filed as per Schedule 2. And Form B is for the public announcement. And Form C is for the operational creditor. Form D is for the financial creditor. Form E is for the workman or employee singular. Form F is for workman, authorized representative of workman or employee. And G is for other stakeholders. Okay, so if you look into it, Schedule 2, Form B talks about operational for public announcement. Except Form FC, rest of the things can be filed in person, in post, email. But Form C should be always only through email because it is by the financial creditors. Okay, this is very important. Number 2. I have never said anything about Form A. Let's come to what is Form A. See, there is something called stakeholders who would like to interact with the liquidator and they can give the suggestions. The stakeholders can be creditors, shareholders, any person who is interested in the company. So he can come and give the suggestions. If the suggestions, if it has to be discussed with everybody, that has to be discussed in Form A of Schedule 2. See, if you recall in CIRP, everything is Schedule 1. Here it is Schedule 2. So these kind of schedules you should always remember. If it is any discussion with the stakeholder, it is Schedule 2. Now, let's little bit go into integrities. There are certain reports. It is the duty of the liquidator to certainly give certain reports. What are the reports? One report is called preliminary. The first report is called preliminary report. The second report is called asset memorandum report. The third report is called progress report. The fourth report is called asset sale report. All reports are must, and I'll explain every report to you. The fifth one is called minutes of the stakeholders consultation committee. The sixth one is final report. The final report is basically prior to dissolution. Okay. So all these reports are must. So note it down. Preliminary report, asset memorandum report, progress report, asset sale report, minutes of the stakeholders consultation committee, and final report. This report should be submitted prior to dissolution. Okay. So why, when this report has to be submitted? See, this is the liquidation commencement date. If you recall, 5 days public announcement, 30 days, you know pretty well, submission of claims. Next 30 days, you know, verification of claims. Next 7 days, accept or reject claim. Aggrieved party rejection can file a claim within 14 days. Okay, there is something from the date of submission of claims. It is a must within 45 days. List of stakeholders should be prepared. List of stakeholders. And from the LCD, that is liquidation commencement date, within 75th day, it is a must that you are supposed to file it before the NCLT or adjudicating authority, preliminary report and asset memorandum report. If you look into it, if you recall, 30 plus 45, again, list of stakeholders. All this report should be filed by the liquidator within 75th day from the date of your liquidation commencement date. This is, you are supposed to always remember. So 75th day. Within 75th day, the preliminary report, asset memorandum report, list of stakeholders report should be submitted. Now, what is preliminary report? What it contains? Let's look into it. What is the preliminary report? Preliminary report says this has to be submitted within 75th day from liquidation commencement date. Okay, it contains capital structure of the corporate debtor. Number 2, it contains estimates of assets and liabilities. It contains estimate of its assets and liabilities. And third, it also important that liquidator has to say any further inquiry should be conducted in respect of any matter, promotion or a failure of the corporate debtor to conduct business properly. The last thing is, what is the plan to carry out the entire liquidation when you leave complete? Likely chances of your completion. So the preliminary report contains 4 details. First detail is capital structure of the company. The second detail is estimates of realizable value of assets and liabilities. Is it necessary you are supposed to conduct further inquiry in this respect to understand the conduct of the business properly, whether the corporate debtor has conducted the business properly. And the fourth one is like, when are you going to complete the entire process plan? Proposed plan of completion of the liquidation. This is given in regulation 30. Okay, this is about the preliminary report. Why we are very clear, like you should know all these things. There are reasons behind so many areas. Unless and until you understand, you will not be able to answer case studies. That is why I'm just giving you like this. Next is asset memorandum report. What is an asset memorandum report? This is defined in regulation 34. Asset memorandum report contains value of the asset. What is the value of the asset? And also this value of the assets, if you recall, you would have done it, this value of the assets during your using your registered valuers you would have definitely taken liquidation value, fair value during CIRP process. In same kind, if you feel that the value could have been deteriorated or value could have been improved, you are supposed to appoint within 7 days from LCD, liquidation commencement date, 2 registered valuers for all the land and building and plant and machinery, because SFA, there is no going concern. But if you want to appoint for further enhancement, you are allowed to do that. Otherwise, you will appoint one more set of registered valuers to understand the present liquidation value of that particular asset. So value of the assets is the part of this particular asset memorandum report. And number 2, value of the business. What could be your value of the business? Number 3, what is the manner you are going to sell the assets? What is the mode? Okay, manner, you can sell it as a going concern. You can sell it as a parcels. You can sell it as a sum sale. You can sell it as a group of assets. You can sell it as a business. All these things are manner of assets. Mode is like whether you want to sell it as in a e-auction mode or do you want to sell it as a private REIT, and what is the expected realization of the amount. What is the expected realization you are supposed to derive from that particular sale, or any other information. You can also use other information. So any other information also you can do that. These are the things contained in asset memorandum report. Whenever you are going to give the asset memorandum report, what are the important areas you are supposed to cover? Value, manner, mode, amount of realization, other matters you feel this has to be given. When you are supposed to give the asset memorandum report, 75 days, within 75 days from liquidation commencement date. This is what is important now. Okay, this is very, very important. Okay, now let's go to the third area I said about progress report. As the name clearly says, progress. So this has to be given on every quarter. Say for example, liquidator is appointed on January 15th. So the liquidator has to give his first report from January 15th to March 31st on or before April 15th. Okay. So every quarter it is his duty that he has to give the progress report. Along with the progress report, during that 3 months, any asset sale has been happened, that is also part of the liquidator to give the asset sale report. Asset sale report along with the progress report. Now, the liquidator completed the job. He has completed, say for example, say October 12th, he has completed the job. He has to file the final progress report October 12th plus 15 days. And within 15 days, October on or before October 27th, the final progress report has to be filed by the liquidator to the adjudicating authority. Okay, having said, I said something like stakeholders consultation committee. We call it as SCC. The stakeholders consultation committee is basically like in CIRP you have COC. Same way here you have stakeholders consultation committee. This is defined in regulation 31A. This says if it is a secured financial creditor, they distinguish based on your liquidation process less than 50%, at least 50%. Say for example, your liquidation value is 100 crores. So less than 50%, you should take in that particular secured creditors less than 20%, a minimum 2 people. If it is at least 20%, is more than 50%, you have to take 4 members in this team. Okay, unsecured financial creditor, again, less than 25%, at least 25%. Here you are supposed to bring 1. Here you are supposed to bring 2 people. Same way, workman, you are supposed to bring 1 person. Government, you have to bring 1 person. And operational creditors, again, at least 25, less than 25. If it is less than 25, 1. At least 25, 2. Okay, 1 and 2, and balance shareholders or partners 1. So put together, if you are going to 6, 7, 9, 10, 11, 13, 14, 15 members will be there. Okay, 6, 7, 9, 10, 11, 13, 14, 15 members will be there. And any discussion on any kind of a asset sale or anything you want to discuss, you can definitely as a liquidator convene a consultation committee, and whatever you are going to discuss, certainly that minute should also be filed with the adjudicating authority on at the time of the complete dissolution. Number 1. Number 2, whether if the stakeholders are going to say that no, I want like this, whether that will bind the liquidator, the section very clearly says, section 35 subsection 2, and also if you look into it, section regulation 31A subsection 10, if you refer both these things, this will very clearly say that the decision will not bind the liquidator. However, it is the duty of the liquidator, if he differs from the opinion of the stakeholders consultation committee, he has to say very clearly why he differs, why that decision is unable to continue. Both areas he is supposed to take into consideration. Okay. If there is any clarification, I just would like to answer some of the questions. Okay, the claims accepted doing CIRP has no relevance. No, because the liquidation is a separate process. The CIRP is the separate process. So the once again the public announcement has to come. Everybody who are already given in CIRP, they are supposed to give in liquidation. If they are not giving, it is their problem. It is your duty, whatever the claims you have received, you have to consolidate and prepare a list of creditors. Since the claim is already filed during CIRP, why again is it regarding the time lapse of the first filing? See, in liquidation, if you look into it, that is the final stage. That is basically death of the corporate debtor. So once the death of the corporate debtor, it is the final. You are supposed to, all the claimant is supposed to give once again the claim forms, and that claim form should also be given within a period of 30 days. If any claims given beyond the period of 30 days, it is the duty of the liquidator to reject the claim. Moment it is rejected, within 14 days, it is the claimant who is the aggrieved party has to file an application before the adjudicating authority. If the adjudicating authority says, please accept the claim, you have to modify the list of stakeholders. Otherwise, whatever the list of stakeholders you have filed is final. Is it clear? Number 2, what are very important? because for your comfort level, let me once again draw a chart so that you will be completely understanding the process, and some of the areas we will cover one by one. Okay, the first thing is liquidation commencement date. Within 5 days, public announcement. Within 30 days, submission of claims. Within 30 days, verification of claims. Within 7 days, accept or reject the claim. Rejection, 14 days, they have to file an application before AA. Submission of claims, withdraw or vary the claims within 14 days. Okay. And it is also within 75th day, preliminary report, asset memorandum report to be filed. And also there is one more important area. Within submission of claims, within 45 days, list of stakeholders, all these things to be filed with adjudicating authority. If you are clear on this, perfect. And I forgot to tell you, I'm sorry, because see, my issue here is like my pen whiteboard is not working the way I expect. I'm all struggling. That is why my handwriting is okay. It's okay, not very, very good. But because of my struggle, I missed one more point. At the time of 60th day, after verification, it is your duty to form a stakeholders consultation committee on the 60th day. All these things are very important area is liquidation commencement date. There is one question. For a company in liquidation, what is the purpose of looking into whether the business of the CD was conducted properly or not? We will certainly come into this kind of a question because I didn't complete the entire chapter. Moment I'm going to complete, you will understand this question. Okay, do you have any doubt in this time chart? And one more issue, I'll also say that if you want to appoint a valuer within 7 days from the liquidation commencement date, you can appoint 2 valuers, and average of the 2, you can take it as a liquidation value for this particular purpose. If there is any clarification you require, please let me know. Okay, if there is no clarification, let's proceed to the next level of understanding. So, I said I didn't cover certain areas. One of that very important area is avoidance transaction. What are avoidance transactions? There are 4 categories of transactions are called avoidance transaction. This would have been covered as one of the duty of the resolution professional under section 25 subsection 2 subclause J in CIRP process. One is called section 43. This is called preferential transaction. Section 45, undervalued transaction. Section 50, this is called extortionate transaction. Section 66, this is called defrauding creditors transaction. All these transactions we are going to understand, because whether you are going to be a person who want to pursue as an insolvency professional is one area. A person who need not pursue an insolvency professional, but you can assist, because this is basically 100%. This is 100% audit area. Any auditor can help in this transaction area, because this is one area you are supposed to be thorough. We all are thorough, especially in this area. Now let's get into transactions one by one. So it will be easy for you to understand. Section 43, preferential transaction. What is called a preferential transaction? Who are coming under a preferential transaction? One is creditor, surety, or guarantor. Okay, these people are entering into a transaction with CD for their antecedent financial debt or operational debt or other liabilities. What is an antecedent? Means old debt. Okay, for their debts, this CD is paying them. And because of the payment, they are in better position under liquidation. Their position is much better under liquidation as per section 53. Section 53, I'll tell you, first you understand, then we will get into nitty-gritties, then you will be able to understand and appreciate very well. Okay, section 43 deals with preferential transaction. This is a transaction entered between the corporate debtor with the either creditor. Creditor, I say simply, it could be an operational creditor, it could be a financial creditor. So with the creditor or a surety or a guarantee of the corporate debtor for the antecedent debt. This antecedent debt could be a financial debt or a operational debt or any other liabilities, because settling this during a relevant period. What is a relevant period? The relevant period here is if this transaction is happening, if it is a related party, if this transaction is happening within the period of 2 years, within the period of 2 years preceding the insolvency commencement date. This is important. Say for example, your insolvency commencement date is 1/12/2021. 2 years prior is 1, that is exactly speaking 30/11/2019. This period is called, from this period to this period is called a look back period, or we will call it as a clawback period or a look back period, whatever the terminology you want to say that. If the relevant period, the transaction between the corporate debtor and a related party, this related party could be the creditor, could be the surety, could be the creditor, could be the surety, could be the guarantor. And this particular related party, the transaction is happened preceding the insolvency commencement date. This comes under the criteria of preferential transaction. If it is an unrelated party, instead of 2 years, this is 1 year. Instead of 2 years, this is 1 year preceding the insolvency commencement date. Now, section 43, let me explain once again, because these areas you have to understand thoroughly, not only for your studies, for your audit. You can do a lot of things. You can give the report to various insolvency professionals by doing this avoidance transaction. The preferential transaction is defined under section 43. This particular transaction talks about the creditor or a surety or a guarantor who entered into the transaction with the corporate debtor in the relevant period. If it is a relevant period, a related party within 2 years. If it is an unrelated party, 1 year preceding the insolvency commencement date. It is not liquidation commencement, it is insolvency commencement date. And they have done the transaction so that their antecedent financial debt or operational debt or other liabilities have come down. And since it has come down, they were in the better beneficial position. If any of the transactions have done like this, those transactions should come under section 43, and the liquidator can file an application under section 43 and ask for the relief given under section 44. The relief is like, please, transaction should be cancelled. The entire property should be vested with the liquidator. See, basically, this antecedent debt means, if you look into it, it's a prior debt. Prior debt, it could be transfer of property, or it could be interest, or it could be anything which is beneficial to that particular creditor. But there is an exception to the section 43. The exceptions are, if this particular transaction has been done during ordinary course of business. If the transaction is ordinary course, see, I always used to purchase from him. I always used to make a payment. That is not an antecedent debt. What is an antecedent debt? I made the payment in the year 2016. Today, I'm making a payment. There is a gap of 4 years. Then it attracts antecedent debt. And if that is a related party, then it is coming under. If it is a general ordinary course of business, that will never come under section 43. Number 2, that has not created a new value, which means I borrowed from the creditor, say for example bank, and using that money I have purchased an asset, and the asset on a later date is going to be charged with that creditor. So it is not going to add a new value. Under these 2 exceptions, they will not come under preferential transaction. Rest of the things will come a preferential transaction. Okay. Let's see, is there any question? For a company in liquidation, what is the purpose of looking into whether the business of the CD, see, conducted properly? This avoidance transaction leads to a kind of a position, so that it has got a relevance. We can definitely bring back those money to the liquidation estate and distribute to the creditors. That is the idea behind it. Okay. In a consortium agreement, if one banker is paid, other is not paid, it is preferential. If this is going to be an ordinary course of business, this is not a preferential transaction. However, if this is going to be, there are 5 creditors out of 5 bankers, out of which only 2 bankers are paid, 3 bankers have not been paid, then it is certainly coming under a preferential transaction. You have to look into it. What is important here is that there should be an antecedent debt. I have seen some of the reports. The company has invested in a subsidiary company, not invested. It has, I can put it this way, yes, they have started a subsidiary company, and this main company has become a holding company. There is no antecedent debt. So that will not come under preferential transaction. You should be very clear. If you read the definition, you will be certainly understand all these things. Whether preferential transaction where few creditors are paid well before the credit period. Yes, that's what called a relevant period. Insolvency commencement date, a look back period is 2 years preceding the insolvency commencement date. If there are transactions done with the related party, there are transactions done with the unrelated party, the 2 years, 1 year time has been given. If any kind of a transactions done and put that particular person in a beneficial position, all these will come under a preferential transaction. Okay, so this is about the preferential transaction. Now let's go to undervalued transaction. Certainly I will give you a break. Now let's go into undervalued transaction. What is an undervalued transaction? This is, I can divide into 4 criteria. Section 45 talks about undervalued transaction. The undervalued transactions means the CD makes a gift, or CD transfer a property, and that particular consideration received for the transfer is significantly less than the consideration provided by the corporate debtor. I'll give you an example. CD give a gift. See, the company is, the director is purchasing the car. However, the company is paying the EMI. If the car is purchased by the company by a proper contract, which has been already placed before the shareholders, if there is that kind of this thing, that is not an undervalue transaction. But nothing is there. The director, he wants to purchase Toyota and he is purchasing the car in his personal name. No resolution, nothing of that sort. However, the EMI is paid by the company, then that will certainly come under undervalue transaction. And there are transactions where the consideration is significantly less than the consideration provided by the corporate debtor. I'll tell you, in one of my case, the corporate debtor has sold the assets to director's grandson, and he has sold it for the purpose in such a way that he is thinking if it is going to be beyond period that we will not catch it up, because it is very clear in this particular section 45 also. Section 46 talks about relevant period. What is a relevant period? The relevant period, if it is a related party, 2 years preceding the insolvency commencement date. It is a unrelated party, it is 1 year preceding the insolvency commencement date. Okay, I will explain to you this area with a clear example. Just wait. Section 47, which is again a very dangerous section for resolution professionals. Resolution professional is unable to find out any transaction in respect of the undervalued transaction. However, any member or partners are filing a case before the NCLT where this should have been done by that particular resolution professional, which he failed to do that, and the other people are filing an application as an undervalued transaction before the adjudicating authority. Two things: the adjudicating authority feels that this transaction is right, he will recommend to the board. Board here means IBBI, to take disciplinary actions against the particular RP. This is a dangerous section. It is basically any resolution professional or a liquidator who is going to do an undervalue transaction. He has to cover up the entire transaction thoroughly. If he misses any member or any other partner, if they are going to file it before the EAA, you have to certainly face the consequences. There is a section called 49. This section deals with this particular position, 45 subsection 2. This particular section very clearly says if there is any undervalued transaction which are in the nature of 45 subsection 2B, okay, this is 2A is gift, 2B, then if that be the case, then it is, there is no look back period. Let me repeat. If there is an undervalued transaction, the look back period always 1 year, 2 year applies. If you are not capable of doing the job, somebody else is filing an application, naturally the adjudicating authority will recommend to the board to take a disciplinary action against you, is section 48. In the case of section 49, which very clearly says there is a CD who has transferred the property which is significantly less than the value of the consideration provided by the CD. Under these circumstances, this will not come under here. This will come under section 49. And here there is no look back period like 2 years, 1 year. As many years as you like, you can go back. But if you recall, in Companies Act, the maximum time to keep up the books is only 8 years. So you can go up to 8 years, that's generally allowed. But the act very clearly says no look back period. When I did one of my case, that corporate debtor transferred his property to his grandson. And this was done 4 years prior to the insolvency commencement date. Very, very visible. The value transferred as per the guideline value, as per the market value, as per the transfer, which are 100% coming under the purview of significantly less. We easily filed a case under section 49. There was another case where the RP failed to take up the transaction, which is in the nature of undervalue. Again, we have filed the application before the AA to take a appropriate action. See, there are avenues available for any chartered accountant. Since we have been qualified and we are good in audit, this area is one of the forthcoming and advantageous area for all chartered accountants who are having less than 10 years of experience, because for writing this examination, the minimum period should have been completed is 10 years. Okay, so technically any undervalued transaction, if it is there, they can file an application according to these transactions, and relief can be obtained as per section 48. Like these transactions will be cancelled so that the original transfer get cancelled and property will be vested with that particular liquidator. Or there is a likely chances release or discharge whole or part of the security interest can also be done. And also any payment or consideration has been paid, that money you can retrieve back and put it in the pool. This is about the undervalued transaction. Let's cover extortionate, then I'll give you a break. Extortionate, as the name itself says, exorbitant interest. So if there is unconscionable, say for example 36% or 48% they have taken a borrowed a loan, and for the borrowing of a loan they have to pay more interest, and because of paying more interest they are getting into the problem of insolvency. It is the duty of the resolution professional or liquidator to file an application and arrive proper kind of interest as per the direction of the AA, and these transactions will fall under extortionate transaction. And relief is sought under section 50. Section 50 talks about extortionate transaction. See, in every area, if there is a huge money, huge interest is paid towards borrowings, and because of that, the revival is impossible, we can file an application under section 50, ask the relief under 51. We have filed in some of the cases because 24%, even though it is an agreed rate, we can very well ask them to reduce, and some of the cases the adjudicating authority has reduced the rate to 18%. In 36% also they have done 18%. Again, this is another area, if you look into it, there is a good opening. But if you look into Companies Act very clearly says that you can borrow money only if it is a private limited company, only from such people. In some of the cases, what we have found out is the company, without considering the Companies Act provisions, they borrow money from various people and they will enter into an agreement. Unless and until this has to be qualified by the statutory auditor. If he is not going to qualify properly in the statutory report, again, it is the duty of the resolution professional / liquidator has to bring it to the attention of the adjudicating authority, and adjudicating authority will give the direction to file a disciplinary action against that particular auditor, because these are also statutory rules fall under the auditor. So with this, I'll give you a break of 10 minutes. We have to cover so much of area. I really seek your. I'm really sorry because this pen and whiteboard has not worked the way I want. Hope this is going to be all right. Our break, and the break is going to be 10 minutes. We will resume by 11:40. Thank you. In the meantime, any doubts, any area, you can very well ask me.
మ్యూట్ అంటే ఏంటి సైలెంటా
Hello.
Yes, sir. Hello.
Miss Anita.
Ma'am gave 5 minutes break, sir. So
Okay.
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 Maybe she should have mentioned us a break in this. I'll just try.
Right.
Thank you.
Fine. So I'll just wait for her to come back. Since she asked for questions, that's the reason. Yeah. Fine. I'll wait for her to come back then. Yeah. Thank you.
Thank you, sir.
Okay. Shall we start?
Yes, ma'am.
Yes. Let me answer some of the questions.
You need to share your screen, ma'am. I have stopped it.
Yeah. I'll share the screen. Okay. There are certain questions which I thought I should answer. Okay. Okay. Regarding extortionate transaction. Again, for extortionate transaction also, the look back period is 2 years preceding the insolvency commencement date. Compulsorily for undervalued transactions, for preferential transactions, for extortionate transactions, the look back period is 2 years. Okay, only in the case of related party, it is 2 years. Unrelated party, 1 year in the case of preferential transaction and undervalued transaction under section 45. If you look into it under section 49, no look back period. You can go as many days as you want. Okay. It is counted from the date of taking COP. Okay. This is regarding your examination point of view. It is basically, it is not COP. It is from the moment you have taken up the membership. So 10 years is the compulsory period to become an insolvency professional. The first thing is like you have to write the exam, clear the examination. Then you have to attend the pre-registration course. Then after this pre-registration course, they will recommend your name with the payment link to IBBI. It will take 15 days kind of a time. Then you will become the resolution professional. Okay. And in how many days an aggrieved party claim that is filed within 14 days of rejection needs to be addressed. See, you are filing it with the adjudicating authority, not filing it before the resolution professional. It is the adjudicating authority. Whenever the case is going to be filed, generally, today the situation is bad because a lot of people are yet to be recruited because one judicial member, one technical member in Chennai answering both the courts, court 1 and court 2. So today there is a likely chances there will be a delay, but generally maximum of weeks time this appeal will be taken, and immediately they will order and give directions appropriately. Do you have any other questions? No questions means let's proceed further. So we have covered preferential transaction, undervalue transaction. Undervalue transaction, one transaction is basically it is your duty to do, failing which section 48 very clearly says somebody will do it and you will be taken for task. Section 49 again it is an undervalue transaction wherein it is very clearly says that there is no look back period. Okay, section 50 talks about all, as I've already told you, is an extortionate transaction and relief is sought under section 51. Now let's go to section 52. Section 52, this is very important in the perspective of bankers. Why I say this is in the perspective of bankers? For two reasons. Reason number one, bankers, as I already told you, may take action under SARFAESI, or they can come under IBC, which means, say there is a creditor, secured creditor, who feels that he would like to sell it through SARFAESI. He can go ahead and sell it through SARFAESI. He will not come under IBC, and his position is going to be changed if he is going to take a decision on SARFAESI. On the other hand, he relinquishes his right and it is going to come in the pool. Then his position is going to be changed. This I will explain a little bit clearly about section 52. Let's go to section 53, which is otherwise called as a waterfall model. And this is a very important section in entire IBC. Once the money is collected or the sale of the assets are realized, you are supposed to put everything under liquidation estate. Once you are going to put it in a liquidation estate, it is your duty within 90 days, you are supposed to clear the whatever the money you have collected. Once, how will you do the distribution? This is basically distribution of money. The first very attractive part in IBC, especially, is the first money will be paid to liquidator. And professionals appointed by liquidator. And liquidation cost. What is the liquidation cost? Liquidation cost is like you are appointing a professional, you are appointing a registered valuer, you are taking the help of others to run smoothly. All those costs will come under liquidation cost. Number two, employees. Sorry, not employees. It is workers. Workers. 24 months preceding liquidation commencement date. I will explain to you again. 24 months preceding liquidation commencement date plus secured creditors who had relinquished their assets. They will come in number two. Who are the workers? You have to verify workers under Industrial Dispute Act. Industrial Dispute Act, workman is defined in a different fashion. You have to be thorough. You cannot take workers under Factories Act. You should refer only under Industrial Dispute Act. Number 3, employees 12 months preceding liquidation commencement date. Number 4, unsecured financial creditor. Number 5, government dues. Again, 2 years preceding liquidation commencement date. Again, limitation is only 2 years due of the government is paid, plus unsecured portion of secured creditors. Don't worry, I'll explain to you. Just note it down. Number 6, other creditors. Number 7 is preferential shareholders. Number 8 is equity shareholders. I will explain everything one by one so that you will never get into confusion. The first predominant interest of IBC is the liquidator, the person helping the liquidator, person appointed by the liquidator as professional will get their payment first. Number 2, workers 24 months preceding the liquidation commencement date. Say for example, the company was working as a going concern or the management was running by the resolution professional, say up to 24/12/2020, and liquidation commencement, CIRP commencement is say for example 1/4/2020, and liquidation order is passed, say for example, say 1/4/2021. Okay, if it is going to be 1/4/2021, 2 years prior, any person who has worked, who is coming under the category of one workman, he has to work from 1/4/2019. This is the period 1/4/2019 till 31/3/2021 is the 2 years prior period. Any person who has been worked during that time, he will get his distribution under this particular second category, along with the secured creditors who has relinquished their security. A person, say for example, ICICI Bank decided, I will not sell it through Sarfasi. I would like to give these assets to you. You sell it and you give it back to me. So that person, the assets, whatever assets we are going to sell, he will get his share in the category number 2. The third category, same like workers, employees. The employees, their period is only 12 months. It is restricted only to 12 months. The fourth period is unsecured financial creditor. Who does not have a security interest can definitely go ahead with the unsecured portion, and he will get whatever the balance. After distributing all the 3, he will get his share. The fifth is government dues. Whatever the government immediately, CIRP or liquidation, the government will send you a 3 years period, 4 years period, like this period, the tax has not been paid, they will send a claim. Now, let me ask you, how the claim, what is the claim for the government dues? What is the claim form? Government dues. Is it form 2? Is it form A? Is it form C? Is it form D? I think there are participants around 32. I'm getting only one answer. The answer is, the question is, what is the form the government dues to be filed with the liquidator? Okay. The correct answer is Form C because he is an operational creditor. Whenever there is an operational creditor, they have to file in Form C. The answer is Form C. These are the questions you can very well, these will be asked either in your general questions or in case study in such a way that they will ensure that you will get confused, but you have to read it thoroughly. If you read it thoroughly, you will never get into any kind of a confusion. So the government dues will be taking place in the period of in the order of 5th order with the 2 years period plus unsecured portion of the secured creditor. This is what I said. When the secured creditor wanted to go and sell the assets through surfacing, and he is selling the asset, and his claim is something like 40 crores, and he is selling the asset, he is receiving by selling that asset only 30 crores. There is an unsecured portion of the 10 crores for which his period, his position is only the 5th position. This is the unsecured portion of the secured creditor. That is the main difference between person, secured creditor relinquishing his shares, not relinquishing his shares. So if he is going to relinquish, he is going to be in the order 2. If he is not going to relinquish, his order is going to be number 5. Okay. And about relinquishment of security interest by the secured creditors, why so much predominance given in the code, including the waterfall? Is it take additional value being released over and above the dues or any other reason? Let me tell you, my friends, basically, if you look into it while getting the loans, I'm sharing my practical experience. While obtaining the loan by the debtor, the value of that particular land and building, plant and machinery is something beyond imagination. I have seen in one case, the land value is, they have stated as 10 crores. Based on 10 crores, they have given a loan of 7 crores. This company was got into problem, and we have appointed the land and building valuer who is registered with IBBA, and he was able to give us the value of the land. This loan was given in the period 2016, and we have taken the land and building valuation in the year 2019. The value is just 2 crores. However, during that time, the valuation was given as 10 crores. So there is a huge difference. Who has to blame? Now everybody is blaming IBC process. They said that IBC process is not a acceptable process. Nobody looks back and see that what was the original value, original security. What is today's security? There are so many things which has been conveniently not brought to the knowledge of the public. Basically, if you are a resolution professional, you will come to know how much money has been paid to the corporate debtor without doing a proper due diligence by the bankers or any creditor for that matter. Easy to blame, and always chartered accountants or resolution professionals blamed very easily as though we didn't do the job. There are so many avenues available for the creditor. One is they can very well go to the personal guarantee. Second, they can very well go to the corporate debtors. They can also go under so many provisions. Nothing. Easily blaming IBC is a failure process. This is the order of the day. I will certainly share the CIRP timelines also for you. That's after completing it, I'll certainly do this for you. Okay. So this is the position of the unsecured portion of the secured creditors. Other creditors. Friends, let me tell you very clearly. I think you would have copied this. I'll just clear this drawing. See, this other creditors. Here, operational creditors will come. Workers whose claims greater than 24 months will come. Employees' claims greater than 12 months will come. Government greater than 24 months will come. All these people will come under other creditors. But to be honest with you, it has never crossed more than secured creditors. It will never come up to unsecured creditors. That is the today's current scenario of liquidation. But for examination purpose, you should understand who are the people covered under other creditors. All these people are coming under other creditors. Clear? And finally, if there is something available, preference shareholders, and something more available, equity shareholders, present scenario, nothing is happening. It is starting with the stage 2 itself. Okay. So section 53 is a very, very important provision, both for the case study and also case law, and distribution should happen within 90 days from the date of realization. All these checklist you are supposed to put it and you are to keep it with you. Now, as I said, the difference in section 52 about the bankers now it is the duty of them to think whether they want to fall in the line. If they relinquish, they'll come in the order 2. If they don't relinquish, they come in the order 5. Order 2 is after liquidator, they will get their payment immediately. Otherwise, after unsecured creditors, government dues plus the unsecured portion of the secured creditors will come into play. Okay. So once you distribute everything, the next thing is like, it is your duty to file an application under section 54 for the dissolution, because now there is nothing in the company. So it is your duty to file a final report. Final report. This final report to be filed with the adjudicating authority to dissolve the company. And once this order has come from adjudicating authority for the dissolution, the AS order should be submitted to Register of Companies within 7 days of passing the order. Within the 7 days. Within 7 days, which is very much important. That is section 54. With this section from 33 to 54 over, there are certain areas in regulations, liquidation process, I will certainly touch upon. In the meantime, I will just give you a very clear chart of CIRP so that you can understand it in a better way. So in CIRP, if you look into it, order is passed and within 3 days, public announcement should be given. And in that, within 14 days, submission of claims. Within 14 days, submission of claims. And within 7 days, verification of claims. Once you verify the claims, within 2 days, you have to constitute committee of creditors, and on the very same day, you have to call within 7 days first COC. Here, the person appointed is called interim resolution professional. And if you look into it, total number of days, 14 plus 7, 21 plus 2, 23, 23 plus 3, 30 days. His life for an IRP is only 30 days. Now, 30 days to 40th day. It's called cooling period. Why it is called a cooling period is basically in first COC, IRP may become RP or new RP be appointed. So if new RP is proposed by the committee of creditors, the committee will file an application before the adjudicating authority for the change of IRP to RP, and this takes maximum 10 days time, so that new RP or existing IRP will be continue to happen, continue to run the process. So this is the 30th day, 10 days, 40th day. If nothing is happening, nothing is moving, the IRP has to continue till the new RP is going to come. Let's take IRP has been appointed as the RP. So within 47th day or 7 days, 2 registered valuers to be appointed. If it is a going concern, plant and machinery, land and building, securities and financial assets, 2 registered valuers should be appointed. If the registered valuers, 2 registered valuers valuation is a little bit higher than one another, the third valuer is appointed, and whichever is nearer, you have to take an average, and this will be done only by the RP. Nobody else is capable of appointing the third valuer. Same way, within 2 weeks, subject to the maximum of 54th day, information memorandum should be prepared, and this should be shared with COC member after getting an NDA from them. Okay, friends, do you recall? The claim period is minimum 14 days, maximum 90 days. We are on the 54th day, so still claims may be changing. This information memorandum, yesterday Madam would have been explained to you very clearly, so I don't want to get into the depth of this information memorandum. Information memorandum is the life backbone of the entire corporate debtors process, because from this only the resolution applicant is going to decide whether to take up the company or not to take up the company. Okay, with this is the principal area you all will know. Let's go to the next area. Insolvency commencement date on the 75th day. The next process starts on the 75th day. One is, this resolution professional should give Form G, which is nothing but expression of interest. Ask seeking the resolution applicants to give express to take over the company. This is the minimum period is 15 days. See, certain areas of statutory period, you cannot take up the chance. 15 days is the statutory period you have to give, and you have to wait how many people are expressing their interest towards taking over the company. From this, you have to select a provisional list of prospective resolution applicant. This is going to take 10 days time. And within 5 days, you are supposed to receive any objections on the prospective resolution applicant which you have issued. On the very same day, since you have already finished prospective list, you have to share information memorandum, request for resolution plan, and also evaluation matrix on this particular day. Okay, and within 10 days, you are supposed to upload the final list of PRA. PRA is nothing but prospective resolution applicant. Okay, if you look into 75 plus 15, 90, 90 plus 10, 100, 100 plus 5, 105th day, you are sharing IM, request for resolution plan and evaluation matrix, and this is there. Okay, once this is shared, within 30 days, resolution plan should be submitted by the PRA. And this is 135th day. Same way, on the 75th day, it is the duty of the RP has to form an opinion whether there is an avoidance transaction. What is an avoidance transaction? Section 43 very clearly said about preferential transaction. Section 45 clearly said about undervalue transaction. Section 50 debits, extortionate transaction. Section 66, we are ready to see defrauding the creditors transaction. All these things are going to happen on the 75th day, and the report has to be ready on the 115th day. This has to be kept ready, and within 20 days, this has to be filed before adjudicating authority. On the 135th day, if you look into it, 2 jobs a resolution professional is completing. One is receiving the resolution plan. Number 2 is filing the avoidance transaction. This avoidance transaction is the duty, inherent duty of the resolution professional to do that. He cannot we stopped because certain duties are cast upon the particular resolution professional. He has to do that particular duty. So 135th day, everything is there before the COC. If this is an imaginary situation, practically nothing will happen like that, but this is the timeline given under CIRP. And 30 days is the deliberations going to take by COC. And on or before 165th day, if the resolution plan is approved, the same has to be filed with AAA on 165th day, and AAA has to decide on or before 180th day whether if the resolution plan is approved by the COC, the commercial wisdom of COC prevails. Accordingly, AAA will approve the resolution plan. On the other hand, if AAA feels this plan is not correct and AAA rejects the plan, I'm sorry, there is something somewhere wrong. Okay, so basically the entire job will be completed by the RP as per the time plan given is 180th day. So if you look into it, if you are going to follow this process of the timeline, the entire CIRP process will be over by 180th day. Failing which, as per the timeline, 90 days extension subject to the maximum of 330 days is what they have very clearly said in section 12 of the IBC code. Okay, but if you look into it, there are 2-3 points. On the 105th day, if you recall, 90th day, okay, 90th day, you are completing the claims. So once you complete the claims, now on the 105th day, the entire, I can put it this way, the entire CIRP process itself is, IM is fully static. There is no dynamic IM, because a lot of people used to think that IM can be updated as and when required. It is not so. Only one area is dynamic is claims. That too will be finished by 90th day. After that, there is no provision going beyond or doing anything. Okay, so with this, it's over about the timeline, which in practice not easy to follow. Any missing of deadlines by the RP invites show cause notice by the IBB. What explanation will save the RP from any disciplinary actions? Very simple answer. Minute everything. If there is a delay in time plan, you just present it before the COC. Tell why there is a delay. See, let me tell you very clearly. 54th day, you are supposed to prepare an IM. You will certainly never do that on the 54th day. Very clearly say before the COC, say that like there is a delay in the finalization of the accounts. Accordingly, this cannot be done. There is a full cooperation from the CD. Accordingly, we are working on it. This may be delayed. Minute this, as long as you are going to minute and the COC is going to approve it, you will never get into problem. Then why should worry? Anywhere, protect yourself. That is the first motto of you. That is the first thing you are supposed to do it. I always advise, prepare a proper minutes for all your delays. Then you will not be generally taken for task. Okay, so having said, there are certain provisions which I feel regarding liquidation regulation I am supposed to cover. Certain areas which are very, very similar to CIRP process, like appointment of liquidator, a kind of these things are very similar. Appointment of the resolution professional. So regulation 3, I don't want to cover it up. There are certain sections like regulation 22B, which talks about section 230 of the Companies Act. If you look into it, if there is no resolution plan, but there is a compromise or arrangement, some any person is going to bring in and present it before the liquidator, and you feel that that is a good scheme, it is part of the duty of the liquidator to present it before the adjudicating authority, get the permission, conduct the meeting. If it is approved by the secured creditors with the 75% of majority, and also because this period is 90 days is given, if you recall within 90 days, verification is over because that is 60 days and SCC is also formed. So you have to present, one is here secured creditors. So 75% of the voting is required. It is also part of your duty to prepare, present it before the SCC, wherein 66% is required, because in both the areas, their secured creditors will also be here secured creditors. So you will never get into that kind of a severe problem as long as the scheme is really good. So this is another area you are supposed to do it. Can you please share the timeline for liquidation and CIRP? Okay, but what I suggest to you is like, certainly there will be a WhatsApp group. Please prepare yourself, send it to us. Wherever the correction is required, I'll certainly help you out, because these things you are supposed to prepare so that it will certainly register in your mind. If there is a mistake, don't worry about the mistake. And we will certainly correct. Whenever somebody is correcting your mistakes, you'll never forget till your last breath. Okay, don't worry about any of these things. So this is one important area you should remember. Second is that liquidators fees. See, the percentage of sharing the fees is not allowed as per our chartered accountants provisions. However, IBC very clearly said percentage of sharing is allowed. But if you ask me how many people have benefited out of it, only very few people have benefited out of this. But today, COC very clearly fixes liquidators fees. Okay, when certain areas are practical side, unless and until you do by practically, you can ignore certain areas of examination point of view, and also assisting somebody. You should know the timelines very clearly, because you are supposed to follow the timelines 100% as nearly as possible, the timeline given under this regulation. Okay, so if you recall, register should be maintained for the minimum period of 8 years, which is common in every area. ROC, if you look into Companies Act, 8 years period is there. So this 8 years, you are supposed to maintain the books. And regarding rest of the areas, one area which I feel very much important is like this security interest. This is one section, regulation 21 and regulation 21A. Both are important from the perspective of deciding the charge on that particular property. Section 20, regulation 21 very clearly says, one, there either you have to produce the security interest either from the information utility or ROC records or CERSI. CERSI is generally has become compulsory. CERSI has come into force from 2011 and it has become compulsory. Like whenever there is a loan, the CERSI record has to be created. So 99%, even if the bank failed to do ROC, the CERSI record, if they are going to give, we have to accept the security interest. And in respect of security interest, you have to be very clear. There are certain procedures they have given in 21A. And this is fundamentally, if you look into it, it's not a big thing. What they say is like presumption of the security interest. How, if there is going to be relinquished or not relinquished, if you are going to relinquish, it has to be within the period of 30 days. If the banker is silent on 30 days, then you can assume the entire assets are under liquidation state. If the banker very clearly says, because the 30 days the time limit for giving the claim form. If he's going to give later, let's not worry. He has to, if any claim is going to come after the 30th day, it is the duty of the liquidator to reject. And it will be filed before the adjudicating authority. As per the direction of the adjudicating authority, we will proceed and we will do the entire this thing. Okay. Apart from it, what are the other areas here important is how you are going to sell the assets. Okay, I told you manner. How are the things you are going to sell the assets? You can sell it as a standalone basis. You can sell it as a slum sale. You can sell it in parcels. You can sell it collectively. You can sell it as a going concern. You can sell it as a business, as a going concern. Only these two things are very important, because the recognition, the first given is you should not ensure to die a corporate debtor, because liquidation is the death of the corporate debtor. If somebody wants to run it as a going concern, the first preference is try to sell a company as a going concern, or try to sell the business as a going concern. Then nothing is possible. Try to sell it as a slum sale is the last one. Like, you have to use your prudence and you have to do it accordingly. That is very, very important. Okay. And the other area which is currently a lot of people is doing is assignment. You are allowed to assign your receivable to somebody else, and this has to be get the concurrence from the stakeholders consultation committee. Another thing, if you recall regulation 28 of CIRP, which is very, very similar to regulation. Once again, I just forgot what is the regulation. What is regulation 28 very clearly says that if any COC member wanted to assign their debt to another person, both should inform the resolution professional, and within 2 days, it is the duty of the resolution professional to reconstitute as per AA. The same kind of a regulation is also there in liquidation. One second, I exactly forgot what is the 31 30A, correct? I remember now. In liquidation, it is 30. Both are one and the same. See, if at all you are preparing for the examination, find out the similarities between some of the regulations. Pull out the similarities, study one thoroughly, replace the words with the other. You are saving a lot of time. It's very, very important in that area. If at all you want to write the examination, you are supposed to understand each and everything. Okay. And there is one more area which is important again. It is like if there are dividends available, you are supposed to put it in the separate account, and this will be monitored by IBBI. And any person who wants to claim, like unpaid dividend or unpaid undistributed profits, the particular claimant can file with the board, and board will decide accordingly. They will release the payment. With this, liquidation process is over. If there is any doubt, I will answer. Otherwise, let's go to voluntary liquidation. And I would like to tell you very clearly, this voluntary liquidation. Voluntary liquidation, section 59 is very, very important one. At least you can expect 2 questions. And today, the position is like that 90% of the companies are currently going through voluntary liquidation. And you should know what is voluntary liquidation, because voluntary liquidation is only one section which contains 9 subclauses, and out of 9, 6 are very, very important. And questions are asked only from the 6. And if you are thorough with the liquidation process, voluntary liquidation process regulation are similar, only few areas are going to be different. That also I will cover up. Okay, so voluntary liquidation, section 29A came in way in liquidation sales also. Sale of CD or a business of CD as a going concern to RP, I think 29A mainly. No. See, basically, if you look into it, any sale of asset in liquidation also, a person whomever you are going to sell the asset, it is the duty of the liquidator to see that whether he is hit by 29A. If he's hit by 29A, it is the duty that he should not sell those assets to those people. Technically, this is an idea that we should never allow backdoor entry to the promoters by getting those assets for the throwaway prices. That is the idea behind 29A. Let me put it very clearly. 29A prohibits both in CIRP as well as liquidation. They cannot come the way they want. Okay. Section 59. This, as the name itself indicates, it's a voluntary liquidation, so there is no default. And assets should be there to cover all the liabilities. These are the main areas you have to see that if these are there, you have to definitely, with the majority of the directors or majority of the partners, they have to give a very clear declaration that they want to go for the voluntary liquidation, and this voluntary liquidation is not for the purpose of defrauding the creditors, and they have to pass a proper resolution, and they can very well go for a voluntary liquidation by doing a special resolution in an EGM or an AGM and go ahead with the voluntary liquidation. See, all these things, if you are going to read 59 subsection 3, this is a very important area, especially in this area. This very, very clearly says how we are supposed to appoint a liquidator in this respect. Okay. Now, what is very important is the moment this has been approved, it is the duty of the liquidator, voluntary liquidator, we call him, has to inform IBBA and also ROC. See, generally in examination, any resolution passed by the company has to be informed, A, to the Registrar of Companies, B, Insolvency and Bankruptcy Board of India, C, ROC and IBBA, fourth, adjudicating authority. Our CA mind immediately catch up with the Registrar of Companies, company resolution, ROC. But the answer here is, it is the duty of the voluntary liquidator should inform both IBBI and ROC. This is a very important area, and or except, should not, shall not, all these areas, wherever you see in this particular IBC book, you have to mark those areas are key areas, and unless and until you are thorough in that area, losing mark, it will kill you, because you will pass and fail. That is the saddest part, because every negative answering, they'll take away 0.25 of your 1 mark. So wherever you have done correctly, this 0.25 will make you 0.75, and ultimately end of the day, that will definitely a depressing point. So you should always remember, wherever and is there, you are supposed to do that. Wherever timelines are there, you have to read both. You have to understand what is there in the precedent as well as in the follow-up. You have to do that 30 days from the submission of verification, 30 days from the after verification, 7 days, 14 days from the rejection of the application by the liquidator. These areas, prefix and suffix, you should never miss out on all the timelines. You have to mark, and you have to put a marker, especially in this area. Okay. So it is basically, you have to inform IBBI as well as the board. And what is the date of the resolution? The date of resolution is date of passing at the board at the EGM or AGM. Passing the special resolution is the date on which section 59 is coming into operation. And once this has been done, it is the duty of the voluntary liquidator filing a dissolution before AA, and this order to be filed with the ROC within 14 days. Okay, can you just tell me within how many days a liquidator has to file the dissolution with ROC? My question is, correct, 7 days is the way. What is important here is, if you understand these things, this is very, very important. Again, whatever liquidation section 35 to 53 has to be followed for voluntary liquidation also, which means 5 days public announcement, 30 days for submission of claims, 30 days for verification, 7 days accept or reject. If there is a rejection, aggrieved party can file 14 days from the date of rejection. Everything is applicable, but there are differences in regulations, which I'll tell you. Liquidation, voluntary liquidation. See, you recall preliminary report, we are filing within 75 days in voluntary liquidation. Liquidation. In voluntary liquidation, this is filed within 45 days. Dissolution for informing ROC, here it is 7 days, it is 14 days. Asset memorandum report, progress report, asset sale report should be filed under liquidation. There is no such case in the case of the voluntary liquidation. Annual sale one second. There is another, these are the main areas you should remember. Okay. And annual status report. This should be filed in the case of voluntary liquidation. This is annual status report. Should be filed in the case of the voluntary liquidation. And distribution of the assets should be done within 90 days here. Here it's 6 months. See, if you are going to be thorough with the liquidation and if you are going to find out the difference between these two areas, you are finished with voluntary liquidation. This is what is very, very important. See, registered valuer, here you are supposed to appoint 2 people. Here, if any. See, you have to prepare your own chart like this so that any area, it is not for the examination purpose. If you assist somebody and you are going to be an advisor to somebody, or if you are going to be an associate to somebody, these areas, if you have a proper flow chart, voluntary liquidation, what are the steps to be covered? What are the reports to be filed? When it has to be filed? What is the difference between liquidation and voluntary liquidation? If you are going to do it by yourself, it's amazing. You will complete within very, very productive way, and also this is very easy for you to complete the entire this thing. Okay, with this voluntary liquidation is over. Only one section, only differences. If you understand, voluntary liquidation process itself is very easy. There is nothing in that. Okay, now let's get into the next area, because I have half an hour. I want to cover other areas also. Adjudicating authority. This is chapter 6. Okay, what is an adjudicating authority? You know, NCLT. Okay, NCLT is certainly where you are filing an application, the application is rejected, or something you feel what the NCLT has done, you don't agree. So you can file an appeal. From where you are going to file an appeal? NCLAT. NCLAT is the appellate authority for NCLT. This has to be filed within 30 days. If there is a sufficient cost, could be a lot of sufficient cost. If there is a sufficient cost, you are going to say extra 15 days is allowed. Now, the case is before NCLAT. This is section 61. And you feel that whatever the order done by the NCLAT, you are not happy. You are unhappy by looking into the order. You can also straight away file with the Supreme Court. There is no High Court here. This is the order. And this is under section 62. And you can file an appeal within 45 days. And if it is a sufficient cost, 15 days is allowed. Please never ever think total 45 days. It is basically 30 days here. And sufficient cost only 15 days. Otherwise, 45 days here, sufficient cost only 15 days. And NCLT, while filing an application, you are filing an application according to the corporate debtors register office location. if the factory is in Chennai, but registered office is in Mumbai, you are supposed to file an application only in Mumbai, not in Chennai, even though the principal main business is done in Chennai, because NCLT IBC process goes with the registered office of the particular CD. Okay, these areas please remember. Okay, now let's get into certain important areas. I told you High Court is not involved. And also, if you recall moratorium, what moratorium says, section 14 very clearly says that no suit or pending litigations have to be stalled for this 180 days. So, which otherwise means civil court does not have the jurisdiction in IBC. It's as simple as this. Section 63 of the IBC code very clearly says civil court not having a jurisdiction over IBC matter. Okay, that you are supposed to remember. Now, I have filed an appeal, but unfortunately, it has never been heard. It is being pending there before NCLT or before the Supreme Court or before the NCLAT. Then you can very well file an application under section 64 for expeditious disposal of the case, and it is the duty of the NCLT or NCLAT to complete the process within 10 days time. But if you are going to ask me practically whether you will be doing this, because this is a kind of a complaint you are making or allegations you are making against the NCLT as well as NCLAT. So generally people don't prefer, but for examination purpose, if there is an expeditious disposal of the case within how many days the order will be passed, the answer is 10 days. Now let's come to important area, which is a very interesting and important area. One is section 65. If you are going to file an application with a malicious intention, say I want to teach him a lesson, and you are filing an application and your intentions are very clear that you are filed this only for the sake of punishing the other person. If that be the case, there is a penalty. This is covered under section 65 penalty, which is absolutely for a minimum 1 lakh, maximum 1 crore. If there is a malicious intention of filing an application against the corporate data. Now let's come to section 66, defrauding creditors. Actually, this is a crux. But if you look into the heading of this particular section 66, it says that fraudulent trading or wrongful trading. See here, for defrauding creditors, no look back period. So if there is an intention of the corporate debtor, he has started the company only to defraud the public, defraud the creditors. If that intention is there, and the happening, say, could be 2016, he has done it, the case was admitted in 2021. So generally, preferential transaction cannot happen during this period. Undervalue transaction ruled out. There is a undervalue transaction. If there is a transaction which comes under section 45, subsection 2, subclause B, there is a significantly less than the consideration transaction, then you can take up 49. Otherwise, all the transactions should come under 66 wherever, whenever there is a defrauding of the activity which is possible. There's a question. Section 14 versus section 33(5), moratoriums on suits, both stop fresh suit. But section 33 silent on continuing the suit upon liquidation order is passed. Does it revive the old suit under moratorium? This is one of the area. Generally, if any, see, you try to understand Section 33 is a liquidation process. Even if you are going to file a suit and you want to continue the suit, where are you going to get the money? You are going to get the money by selling the asset. What is the duty of the liquidator? Liquidator collect everything and putting under liquidation estate, and he is going to realize every asset and going to distribute. If this particular person is going to fight in that particular court, say for example, I have asset in Chennai and I have done some kind of a activity which has affected somebody in, say, Delhi, and the case has been filed against the corporate debtor in Delhi. He wants to continue that particular case. If he is going to continue, the ultimate end of the case is what? He has to get back his money. How will he get back? Unless and until he files the claim, and the claim is admitted here. And if it is admitted here, the distribution is going to happen as per section 53. So the purpose of suit, the purpose of litigation is getting back your rights. Why? Even if you are going to do it in your court, if I as a liquidator sold everything and filed a dissolution, where is that you are going to get back the money? That is why the continuing suit, they were silent under section 33. They want everything should come under one umbrella of liquidation, because after liquidation, the ultimate purpose of the liquidation is a dissolution. Hope I'm making myself clear. The ultimate purpose of the liquidation is a dissolution. Once it is dissoluted, wherever you are going to put a case, it could be director centric. Yes, you can continue. But if it is a company centric, if I sell the assets and distribute to all the stakeholders, the person who is filing the case will not get anything, because nothing is available, because I've already filed a resolution. The dissolution order has been already sent to ROC. So that is the reason liquidation is something different from moratorium filed under section 40, section 14. Okay. So coming back to this fraudulent transaction. Any transaction happened, there is a motive to divert the funds, to take benefit out of certain transactions. If you are capable of finding directors' misconduct or officers' misconduct or any employees' misconduct, siphoning of funds, all these things, you are supposed to file case under section 66. 66 is an open section because there is no look back period, and 95% of the cases are filed under section 66. And 67, whenever the case are filed under section 66, 67 is basically order passed according to the gravity of the situation under section 66. With this, if you look into it, adjudicating authority is over. I'll just take you through offences and penalties. These offences and penalties are very important area, but if you recollect, or rather this is the first time you are reading it, offences and penalties are not being penalized by NCLT. It is coming under section 236. This has to be filed before the special court, and this special court is established as per chapter 28 of the Companies Act 2013. So offense penalties, whatever has been there, it has to be tried only through the special court. This is one of the area you are supposed to remember. Okay, then how to see this offenses and penalties? Whatever I'm going to teach here, or rather tell you, are basically mostly for easy remembrance, a kind of a this thing. There is nothing like a difficult area. Okay, so first let's think, who are the people filing an application? Financial creditor will file, operation creditor will file, corporate debtor themselves will file. This is covered under section 77. This is covered under section 76. This is covered under 75. If the financial creditor is filing a false material particulars or omits something, then there is no imprisonment for the financial creditor, only fine. The fine is minimum 1 lakh, maximum 1 crore. In the case of operational creditors, if you remember, if he is knowingly, willfully concealed some information, could be main area is one second. Dispute. If you remember, operation creditors, he is not supposed to conceal dispute. The operation creditor is concealing dispute willfully or willingly, so that he is not bringing to the notice of the adjudicating authority. The imprisonment for them is a minimum 1 year, maximum 5 years, and the penalty is minimum 1 lakh, maximum 1 crore. Okay, wherever you see corporate debtor, except 2 areas, wherever you see corporate debtors, the punishment is minimum 3 years, maximum 5 years, and penalty is minimum 1 lakh, maximum 1 crore. Wherever CD's name is there, if he is going to done any offense and penalty, the action plan is very simple, 3 years minimum and maximum 5 years, except 2 areas. There are 2 exceptional areas. So first thing is application filed by financial creditor, operation creditor, corporate debtor, section 475, section 76, section 77. Okay. So minimum, there is no imprisonment for the financial creditor. For only penalty, minimum 1 lakh, maximum 1 crore. In the case of operation creditors, willfully or he wants to conceal the dispute, minimum 1 year, maximum 5 years, minimum 1 lakh, maximum every area, minimum 1 lakh, maximum 1 crore. And here, minimum 3 years imprisonment, maximum 5 years, wherever the CD is going to come. Now, let's go to the section 74. 74 talks about 2 areas. One is moratorium, contravention in moratorium, contravention resolution plan. Contravention moratorium, again, this is divided into CD and any person. Here, resolution plan, any person. If there is any person who is going to contravene the resolution plan, or he is the person part and parcel of the resolution plan, the imprisonment is minimum 1 year, maximum 5 years, minimum 1 lakh, maximum 1 crore. In respect of CD, I told you, irrespective of anything, put minimum 3 years, maximum 5 years, minimum 1 lakh, maximum 1 crore. The first exception is here in moratorium for CD, maximum limit is 5 lakhs. This is one area you are supposed to remember, because this not 5 lakhs, it is minimum 3 lakhs. Sorry. This is one exception in respect of which exception is that minimum 1 lakh, maximum 3 lakhs. For any other person, very simple, minimum 1 year, maximum 5 years, minimum penalty is 1 lakh, maximum penalty is 1 crore. Section 74 deals 2 situations, moratorium and resolution plan. If any person contravenes the resolution plan, the minimum imprisonment is 1 year, maximum 5 years. The minimum penalty is 1 lakh, maximum is 1 crore. The first area is, the exception is this area, moratorium for CD. Okay, let's get into section 71, 72 and 73. All talks about CD, all talks about falsification of books. When these things are omission, material omission, or false representation. All these things are CD, thumb rule, minimum 3 years, maximum 5 years, minimum 1 year, minimum 1 lakh, maximum 1 crore. Minimum 1 lakh, maximum 1 crore. Wherever CD, I told you, except 2 areas, all other areas, minimum imprisonment is 3 years, maximum is 5 years. And in respect of minimum penalty is 1 lakh, maximum is with 1 crore or both. Every area or both is also applicable. Now let's get into section 70, which is a very important section. Here there are 2 people involved. One is CD. This is CIRP process. Any person who is going to involve any kind of offense during the CIRP process, one is CD, another one is resolution professional. People who wanted to become a resolution professional, please remember your minimum imprisonment is 6 months and minimum penalty is 1 lakh, maximum is 5 lakhs or both. All areas or both is allowed. So the moment you want to become a resolution professional, always remember, whenever you are going to do that, you should first remember don'ts. The don'ts is 5 lakhs is the maximum penalty, keep 5 lakhs separately. 6 months is rarest case. The penalty part, if you remember, CD, I told you already, wherever the CD offenses and penalty, minimum 3 years, maximum 5 years, and minimum fine is 1 lakh, maximum fine is 5 lakhs. This is reading the CIRP process. Okay, now let's get into section 69. Here, defrauding the creditors by CD. Always CD, I told you, 3 years minimum, maximum 5 years, minimum 1 lakh, maximum 1 crore. However, I told you 2 exceptions here. There is a defrauding of creditors. The minimum period starts from 1 year and highest minimum period is 5 years. Only in CD, 2 areas. One is defrauding creditors. Number 2, moratorium. The general thumb rule of 3 years to 5 years, 1 lakh to 1 crore is different. All other areas, wherever you are going to look into offenses and penalties, follow the thumb rule. This is the easiest way of remembering. But whether you note or don't note, read the provisions thoroughly before creating your own notes. The last section, if you look into it, is section 68, punishment of concealment of property. So here the word property, the value of the property is greater than 10,000 rupees. There is a CD because concealment can be done only by the CD, and this would have been done preceding 12 months. If all these criteria is there, wherever the CD, the answer is minimum 3 years, maximum 5 years, minimum penalty is 1 lakh, maximum is 1 crore. If you remember, everything is over in respect of this particular area. I have not covered pre-packaged insolvency resolution process because the person who is going to cover will cover this particular area. And with this, we have covered the entire portion of liquidation process, liquidation code, liquidation process, voluntary liquidation code, voluntary liquidation process, adjudicating authority rules, and also offenses and penalties. These are the areas which I thought I should cover today. I have covered. Now, what I require is any doubts you can ask me on any area. I'm willing to clear all your doubts. Now, it is open to the floor. So any person can ask me questions. If you have questions, you can ask me. I'm here to help you out. Okay, people who are going to appear for the examination, once again, let me unmute my video because I'm just still going to give you. Can you just tell me how many of you are willing to write the examination? I'll give you some more tips. Unless and until people respond, I will not be in a position to do anything. Please, you have to state how. I would like to know how many of you are planning to write the exam. Only 2 people are going to appear. Okay. See, I'll tell you what are the areas you are supposed to cover. Please feel free, because this is one area. Unless and until you ask me, I'll not be in a position to give you a tips. So I'll give you the tips. What are the areas you are supposed to cover? First thing you are supposed to cover is voluntary liquidation. Lot of questions are coming from voluntary liquidation. The second area you are supposed to cover, technically, bankruptcy process. The third area you are supposed to cover is fresh start process. The fourth area you are supposed to cover, section 53, there will be a question. The fifth area, IPA, IU and IP. There are a lot of similarities in this area. If you pull out the similarities, leftover regulations will be in IPA, only 3 regulations are left over. In IU, around 10 regulations are there. In IP, there are only 3 regulations or 4 regulations. There are common areas. You have to pull out those common areas. Once you do your own homework, this will become an easy one. 6th is inspection and investigation. 7, grievances. Okay. And 8th, CIRP. CIRP, I am not worried about CIRP because everybody is thorough on CIRP. The only one area you are supposed to cover is understand the case law. The questions in case study are based on the latest case laws. So if you understand the case law properly, this is absolutely easy cakewalk. Okay. And IU, you should definitely expect a lot of questions in IU. Because IU is one kind of a little bit, you have to spend little time because it's a little bit boring subject. Okay, this is the 8th area you are supposed to cover it up. And offenses and penalties. Certainly questions are going to come both in CIRP and individuals and partnership. Compulsorily there is a question. And 8th area, 245 to 255, compulsorily there will be one question because how the schedules have been certainly amended. That is one area you should be thorough. If you are going to be thorough on this, I think that's not at all a problem. But if you have any specific query, especially in this respect, you can ask me, because this is a forum where feel free, we are here to help you. Okay, so any doubts you can ask me. I'm here. I will certainly help you out, because part of our duty is to help our friends. And code of conduct, yes, I will never say code of conduct you should miss, but today lot of disciplinary proceedings have been happening. So technically you should be thorough in code of conduct. If you are going to read once, that will do. Okay, one more area forget is model bylaws. Please remember, model bylaws also important. Model bylaws schedules you have to read. Okay. The 6th one is investigation and inspection. The 7th one is grievances. There are 2 regulations you are supposed to read, both grievances as well as inspection and investigation. These are the areas. Okay. And certainly I'll give my mail ID. This is my number. And my mail ID. You can call me anytime, even if I don't call, don't worry, I'll certainly call you back before end of the day. Any doubt on IBC, you can very well call me. We all people whomever are taking classes here are here to help you out. There's nothing like, I am great, you are great, because that concept like I great, you great has gone. It is a concept of team. There is no question of I, it's a question of team. You may be good in certain areas, I may be good in certain areas. Unless we put our efforts together, we will not get the greater results. So this is an idea, and it is my duty as a teacher. I feel this profession is one area. Not everybody is thorough. All make mistakes. But if you discuss with your friends, you can rectify your mistakes and can move forward. That is important. You cannot stagnate yourself, or you should not feel shy. You should not feel like you are left alone. There are people here certainly help you, because IBC is one niche area. So everybody, if we join hands, we can grow together. There is no selfishness here, because you know how, one area which I feel that I should share it with you. Our fees on CA will come after some time, but here our fees are coming properly. Yes, there are nitty-gritties, there are problems, but because of our experience and knowledge, because of the people who have done a mistake, will certainly help you to tell you that how you have to move forward, especially in this area. Okay. Have any questions, please feel free to ask me, because I have left only with the 3 minutes, and I would be very happy if you have doubts. The only 2 areas I'm really sorry, because there was some technical glitch from my side. This whiteboard was not working properly. Now, good. It's at least I'm happy you are able to look into it. Should the amount received as per the resolution plan be distributed as per? See, resolution plan is totally different from section 53. Section 53 is a liquidation. But if you want to distribute under section 30, which means like there is a resolution plans, you have to distribute as per section regulation 38 read with regulation 30. Nothing related with section 53. Please forget about it. In resolution plan, the first, again, we will be paid first, followed by definitely operational creditors. If there is a value available, followed by dissenting COC member, followed by assenting COC member. Dissenting should also be provided, paid before the other COC members who have approved for the plan. Case laws, whatever they have stated here, you are supposed to follow. And case laws, whatever is there in your examination, which is given in syllabus, if you are going to read it sufficient, I think case laws will be covered fully here. If the resolution plan fails, can the compromise under section 230 be referred to? Yes, that is part of our COC. Final meeting, we will say that we will try under section 230. If not failing which, we will try to do under going concern or sale of business, then only we will go under other areas. We will put ourselves in the minutes. That is the practical side. Okay. So if there is anything I can explain. Otherwise, I would like to I think material part of it, whatever I have said, I have been only from the material. Okay, like you can download from the IBBI dot on which go to legal, take, download the act. Prior to that particular area that will be comfortable to you, mark it there. That is a clear idea, especially in this respect. Okay, whatever possible extent, if I can do that, I will certainly share my presentation. And thank you very much for your patience listening in spite of little bit glitches. And thank you very much, and very, very good luck to you. And thank you. Thank you, Revati. I think I have finished. You have to unmute yourself. Unmute yourself.
Yes. Okay. Thank you very much, Anita, for that fabulous presentation as usual. I think that all the participants would have gained quite a bit out of it and a lot of confidence in taking the examination also. Actually, we will request SARC to create a WhatsApp group with all the faculties also and the participants, so that whatever are the questions which they may get during their prep for the exam, the questions can be posed on the group, and the group would, we will be able to take up the questions there in case it's not clarified now. Thanks a lot, Anita, for promptly accepting. She's my go-to person whenever I have a issue in IBC or faculty need in IBC. Say, Anita, please, and she'll immediately oblige, much to the benefit of all of us. Thanks a lot. And we will be meeting again tomorrow with CA Ritesh Mittal. Yeah, we will be sharing the PPT today. Sorry, yesterday it was not shared. I will share it with you today. Tomorrow you will be having CA Ritesh Mittal to be taking individuals and partnerships. He is also a very seasoned faculty, and he will also, I hope, will be able to, he will definitely be on par with everyone else here. So thank you very much, everyone. See you all tomorrow. Thank you again, Anita. Thanks a lot. And thanks to the tech team for supporting us always.
Yeah, thank you very much. Wish you all the best. Bye.
Yeah, bye. Thank you.